The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Welcome, folks. This is Tom O'Brien filling in for Steve today. He's going to be back growling and prowling with you tomorrow. We get our man, Mr. John Logan. John kicks us off every trading day right at TFNN, 8 o'clock in the morning, folks. And don't forget, you can get all that programming right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com on your cell, hit the TV in the top right-hand corner. You get the audio plus the video. Market-wise, right now, you get the Dow Industrials up 245, Nasdaq's up 71, S&Ps are up 28. And we travel around the world, and we're looking around the world right now. The FTSE's up 1.6, the CAT is up 3, and the DAX is up 2.3. Our own markets, Dow's up 1.4, Nasdaq is up 1.5, and the S&Ps are up 1.6. So, John Logan, when we take a look at the profile scanner, when we were looking at that yesterday as to the profiles of the dogs, there was only like 4 of them.
IBM was one of them.
IBM was one of them. And it's interesting. So you get IBM, up $3 today. There's nothing there. But you know what I was wondering? And when you take a look, what happens, folks, is that inside the scanner, you can do the indices, but what you also do, you can go right inside the whole S&P 500. And what's intriguing there is that when I'm looking at Google, it's like, we're at 512. Google was at 608. It's like, okay, man, this is going to get interesting, on the way up as to where one of those basically resistant points are, because that's a big dog, man. There's no doubt about that when you look at the context of the tech market,
Yeah, I pulled up IBM here. I'm just going to pull up Google. And I'm going to pull up Google L, I guess is the one I should pull up. I'm also going to pull up Apple. I'm just going to choose some instruments here.
Yeah.
It's really cool. You can type in things you want to see, and then I'm going to go in here and I'm going to say, okay, let's look at Google. And let's look at the landscape view here. Let's see where the market actually is. This is the level of the market. These are my inflection points I need to pay attention to.
Yes.
And I've got this 516.71. I've got the 525.94. But, Google, just by looking at this, don't even look at the charting.
Okay.
But just looking at this, I'm below profiles on the weekly, and I'm below profiles on the daily on Google. And I'm just going to go into my chart here, and I'm going to look at Google as I've got it pulled up here on the daily. And here's my 525 number I just talked about from the scanner. We're definitely, in an imbalanced situation on the downside. Here's the weekly. Now, this is really cool because last week, we obviously had a close below long-term profiles. We kind of got down here. We tried to do a little bit of a dead cat bounce here on Google. The market was really helping this situation. We closed below. And then this week we opened up, went back and retested that. And these are, without question, these are when you close above or below profiles and then you go back and retest that former support, now resistance.
Yes.
Man, those are super high probability setups and trade. And that high this week was 525.37. I'm looking at it right now.
Yeah.
And guess what? The bottom of that box is 527. So we got very close in the neighborhood of the retest. And then it was just, hey, you know what? We gotta put a trade on here. We know where to put stops oriented above there. So again, that was the weekly. And by the way, the daily 525 lines up exactly with the weekly. So we know now, or we knew then, that we had a dual time frame confluence, 2 inflection points on our strongest time frames, weekly and daily, lining up there to give us a maximum just high probability selling point there. And the cool thing is as I pull up the scanner again,
that's really cool, man. See, that harmony and confluence on the daily and the weekly is pretty intense, man.
Oh my God, yeah. So I'm gonna wait for this to refresh here. I'm still getting it kind of refreshed there, but my inflection points that I'll see there are daily on for lows 525, weekly on for lows 525, and it's just a really cool situation from a trading standpoint to put those types of odds in your favor. Let me pull this back up here. So there's my 5. Oh God, I'm refreshing again here. Well, trust me, they'll pull up. But anyway, so this is a relatively ugly situation to go long. The only way I'd feel comfortable going long is to get back above 525. Because that's kind of the fence, if you will,
sure,
on the shorts here. So
sure. Now, could you bring up the XLE for us? The XLE is the energy sector, folks, and the XLE, of course, has just gone from 105 down to 72 actually.
By the way.
Yes.
By the way, just to finish on Google,
yes,
if the short-term traders, here's the 240, and that 240 was hit to the tick this morning. So if you're kind of thinking about letting the 240s regulate this continuing to go down, you've got some areas of significance that you can pay attention to, namely the 516, 517 area, which you've already hit this morning, and come off 4 points already.
That's interesting, isn't it?
Yeah. So XLE, is that what you were?
Yes.
Okay.
Because what you have, of course, inside the XLE, folks, is that this came down hard, number one, and you expect a bounce. That's exactly what we're getting. And the real key is that you'd be using this tool to say, okay, how far can it bounce and where are those inflection points if you decide, if you're basically saying, hey, this thing could go lower.
Yeah, let me pull up the scanner and let's just we've got our ETFs here, and I know XLE is in here, so I'm going to go in here, and there's XLE, the energy sector. Here's the inflection points that you can pay attention to: 81.7460.
Okay.
Then you've got the 73.21 and then 78. 10 up top. And here's my landscape view on the XLE. Just to kind of, I put this feature in because I like it. It's just because it kind of gives me everything in one little snapshot.
Yes.
So there's 78.10 sitting there, and the level of the market's right there. So I'm going to go in here, and I'm going to go, okay, there's the weekly. I know I'm down. Here's that 78.10 area. So we're kind of in a little, in my opinion, probably not the best odds in our favor to really put a trade on right now, because we're kind of coming back into some support on the daily, being above the profiles here, but yet we're still kind of bearish here on this one. The stronger sell here obviously is going to be in the 81.75 area.
Yeah, which is only 3 points away, which is pretty cool. Right.
Correct. But the cool thing is if we start getting down below 78.10 and especially close below it, we can start thinking about this again from the short side, because then we're kind of like short on the weekly, then we're kind of getting back in a balanced area on the daily, and depending on how the market moves today, I mean, this obviously has not been in sync with the market going up all the time, and that that kind of disconnect in general is something I love to look for. I know you look for that also.
Yes.
And now we got now we're kind of like, okay, time to get the short hat on here. So and I'm with you. Like I mean, I think the market is it's really, in my opinion, not responsible of what Yellen actually does. I mean, like just like Greenspan with this irrational exuberance talk, and I'm talking about XLE in the end. But the market in general is going to drive a lot of these things one way or the other, and for her to go out and just continue to. They're more concerned about the price of the stock market than anything else.
Oh,
and
is
that really their job? No, that's not their job.
Yeah. It's turned into that. Well, and it's a self-fulfilling prophecy, folks, because what ends up happening is that there's no doubt the amount of wealth that gets built up in the market from IRAs is absolutely huge. So it is there. I can see where they're coming from. Right. One of the keys is that, if people don't take the bread, then, I suspect the bread's going to be gone. But that's where this gets really interesting, man. Where is that transfer of wealth going to take place? Do you know what I'm saying?
Yeah, but, yeah, exactly.
Yeah.
But I don't know. We had some, we have had some hard stances against public opinion before by the Fed, or not public opinion, but I guess public desire when it comes to stock market, like up or down, and they just are really seemingly not preparing people, in my opinion, for what ultimately will probably happen, which is they will have to raise rates, and they'll have to raise rates fast. at some point, like when this thing really kind of starts hitting home. And I know, me and you are on the same page. I think bonds and notes are going to continue to go up for a while.
It's great. Even today, folks, okay, the bond market today, you get the 10-year down 18 ticks, the 30 off 1.7 ticks. But guess what? You don't have any juice on the way down. There's no big selling on the way down here. In fact, we've only done 206,000 contracts on the 30-year, which is, that's good volume. Let's say we're going to do like 400,000, which is good volume for the 30-year. If we take a look at the 10-year right now, the 10-year is done 728,000. Well, that's not a monster. They'll come in about 1.3, 1.4, but you're coming into 1.3. They come into 1.5. So
yeah, I mean, but think how this is not like a really bad reaction to the market just going crazy and them saying that they're probably going to raise rates in 2015 unless they change their mind every month, I mean, but the 10-year hasn't acted bad, just like the 30-year, like you're talking about. But we had a little bounce on that inflection point yesterday, 127 general area.
Yes.
Got another opportunity here approaching right now at the 126.06 area on the 10-year. But if we close below there, that's technical damage. All right, and then we kind of got to say, you know what, we got to sit tight for a while here and see what's going to happen on the 10-year. So
yeah, listen, it was interesting yesterday, John, when they were coming out with the statement number one, and then on the news conference, I was looking at those bonds. I'm saying to myself, okay, are these things going to just die on the vine? I mean, because what does happen, I'm bullish on them, but the reality is I know that at any second, that can get destroyed in about 2 seconds, meaning that market, because that market's been stretched for a long time. The only thing that, looking at it on even the technical and fundamental basis, is that because rates are so low across the world, I'm saying to myself, hold it, our rates are still huge compared to the rates across the world. So it's like, okay, they don't have to go up. It's crazy, but that's a reality.
I know, and the 30-year went up 6 handles that one day where we made that big spike up.
Yes,
you got to always be prepared. They can go down 6 handles in one day too.
That's intense.
Yeah, so you gotta, no matter what we're saying or whatever, everybody's got to put their stops in and be able to, just kind of take their ball home and come back the next day and play. When it comes to trading, you don't want to.
No, that's a fact. That's a fact.
Yeah.
And folks, inside the bond market, we have been getting moves for a point, but depending on how long you've been trading bonds, if you trade bonds, that is so unusual, it's unbelievable. Okay, it's just a total mind blow. It really is.
I know. I got to get down there and see you again.
Listen, man, you got to get down. It's a beautiful thing. I really like it.
I'm freezing up here.
It's
like 0 at night here, and I'm not used to that.
Yeah, especially coming back from the Philippines. Oh my God.
I know.
Well, listen, man. Thanks so much for kicking us off every day. We really appreciate it, and look forward to speaking to you again, man.
Thank you, Tom.
Have a great day, John. Have a safe day. Bye-bye. You stay right there, folks. We'll come right back. Dow Industrials right now are up 253. Nasdaq's up 74. S&Ps are up 30. Come right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition.
Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. You get the Dow Industrials right now up 244. Nasdaq's up 72. S&P's up 29. If we go over and we take a look at these E-minis right now, and we take a look at those in real time, what we have is this, is that they have got up to 2041, and you're into that level. We'll see whether the highs are going to get tested again, or we'll see how this baby shakes out. When you do take a look at this, what you have here flat out is you got a wide price spread. The volume is not in these babies yet. The thing that's pretty wild, and this is what markets just love to do, the low of the first little downdraft that we had on December 1st was 2041.25. We hit 2041.25. That's like so bizarre, it's like crazy, okay? So what you do is you take the correlation of how you're down versus how you're going back up, and inside that correlation right now, we'll see whether we're going to have this juice come in and stay in the market. Right now, you have 200 million shares on the NYSE, and that is light shares on the NYSE, and you have 466 million in the NASDAQ. Now, in both cases, that is light for this time of day, for basically 10:30 in the morning. So when we get into about 2:30 this afternoon, you're going to get a real clue as to, number one, can you get the follow-through with juice? Because what we did have out here yesterday is this. The NASDAQ Composite had the juice on the way up. The composite did some good volume, and that would be considered that, yeah, you're going up. So bottom line is that we'll see whether they get that follow through today. Because if we're going to go to those highs, you're going to have to get that follow through right now. We're coming into a Friday. And the real key is going to be, is this just a sell into the weekend? Because what you do have is that next week is the last trading week per se to the end of the year. You know, the follow. Well, actually, not really, because the following week you don't have Christmas until Thursday. Hold it. No, it's next Thursday. It's Christmas. Huh? 1 second. Yeah. No, this is it, man. Yeah. So you got Monday and Tuesday. That's all we got here. That's where this baby does shake out, and that's about it. So we'll see what type of holding of price it gets, number one, and in fact, do you get a sell on this way down? The bond market is still saying flat out that, hey, guess what? It wants higher price, which is just absolutely bizarre, but bottom line, that's what it wants. If we go over to the gold market, we take a look at the gold contract, what we had out here. Gold today is up $1.90. You've done thus far 96,000 contracts. That's not bad. You want more contracts done. That's the reality. We have gone price-wise out here. Gold was at 12.13. They're selling into it at the 12.13 level. When we just came down 10 minutes ago, 20 minutes ago at 10.10, that was down with some juice. Now, they sold that down. So here's the correlation. As you were going back up this morning at when we got to 12.13 at 05.20, you got up there with 4,900 contracts. We came down, and this is going to be where it's going to get cool. We came down at 10.10 at 96,000 contracts. That 96,000, however, was coming down into a whole slew of contracts. Let me get this. Coming into 13,000. So 13,000. So what that is saying is that you came down with lighter volume. Now the key is going to be, can they basically get strength on the way back topside? They couldn't croak it under the next lower level, because that lower level, when we came down fast and furious at 1,400 hours yesterday, got us into the 1185 number. And right now you're at 1196. We go to the XAU. We take a look at the XAU. XAU out here is up $1.12. What the XAU and the HUI have done is that they rejected lower price, had lighter volume. If we take a look at the XAU, 2 days ago, that's when it was hitting a lower low. We did 40 million shares versus 48 million shares in the XAU. The HUI, what we did inside the HUI came down with 26 million shares versus 32 million shares. Now the key is going to be, how can we go back up, and what kind of juice do you have on the way back up? This is Tom O'Brien. This is TFNN. You stay right there, folks. It'll be coming right back. Dow Industrials right now up 232. Nasdaq's up 70. S&Ps are up 28. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 233. You get the NASDAQ up 68. S&Ps are up 31. We go inside the Dow Industrials. We take a look at what the strength is. Inside the Dow, every Dow stock is positive right now. Microsoft is the leader, up $1.11. Goldman Sachs is next at $4.31. Ma Bell is up 65. American Express is up $1.66. Those are the leaders. The laggards, you have Procter & Gamble up 21 cents, ExxonMobil's up 29, Chevron's up 58, and Travelers Insurance is up 70. Inside the NDX 100, we take a look at, because the NDX 100 had a heck of a day yesterday. Leading it out there is Vipul Communications. Vipul is dead meat. Vipul is a Russian company. It's at $4.17. That is a dead cat bounce. This baby, you talk about going south. This thing is pretty intense. And they must have did another IPO or something, because I remember Vipul years ago, 15 years ago. Bottom line is that this had just gone from $14 down to $4. We go back to the NDX 100 and we look at that again. Kraft is the second one. That's up 283. Their CEO just quit. Dish Networks is up 283. Biotech, BIIB, that is up $13. Let's go over to the biotechs. So that's going up and testing its high once again. In fact, let's take a look at the IBB. So the biotech index right now is up $6.13. You're at 309. And she is challenging her highs once again. And this is going to be pretty cool, because what you have with the biotech index is this. The high established is 316.80. You come off that high, you got down to 292. You just did a nice little bounce here. You're back right into the lows of the high. The lows of the high is 309.30. We had 1.8 million shares there, and we'll see whether we do that today. We're at 516,000. It certainly can do that kind of numbers. Back to the NDX 100. The laggards inside the NDX 100 today is that you get Bed Bath & Beyond down 56 cents. Amazon down 180. Whole Foods is down to 20 cents, and you get Citrix down 20. Now, if we go over to Amazon, folks, just announced, their delivery system is just amazing. It blows my mind. But the bottom line is what they just announced. So check this out. So first off, Amazon's at 296. Amazon wants to trade a lot lower. What's unusual right now is that coming into the Christmas season that Amazon is actually going down versus going up. What you had is that last December, that's when Amazon had topped out. Amazon topped out at 405, and right now you're at 296. Amazon, looks to me like this is going to be a disaster. I mean, you're talking 125 or something. What they just announced this morning, so check this out. This morning they just announced, if you happen to be in Manhattan, this is just absolutely amazing. So Amazon began offering 1-hour delivery in Manhattan today. The retailer's latest efforts to connect consumers with products they order online as quickly as possible. The Prime Now program covers delivery of tens of thousands of household goods, including shampoo, paper towels, toys, books, the Seattle-based company said in a statement today. It is going to expand to additional cities in 2015. That, folks, is just, for consumers, is absolutely awesome. Yeah? If you don't have Prime, this is not a bad time to test drive it, because you can do it for 30 days free and decide whether you want it, whether you like it, on all of the above. I use it. It's dynamite. The system itself, how they order, is pretty amazing, because they have a one-click system. And what happens with the one-click system, you can have your different credit cards in there, depending what credit card you want to use, whether it's business or personal. Then you get different address accounts in there. You have an address book. So when you actually are shopping, you go click, 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 bang, it's done. Click, 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 it's done. In fact, it's my daughter's birthday today, and she just texted me when we were on the air. And, at her company, a few more, nice little items just showed up, which is a beautiful thing. When we take a look at the bond market out here, the bond market continues to bottom line. Actually, let's go to the TLT. If we take a look at the TLT, because if you don't have the futures, what you're going to see in the TLT is this. The TLT, the high that was generated October 15th, was 127.68. You did 37 million shares there. When we come up and tested it, we did 7.4 million. And just so you can understand something, you wouldn't expect the first time you're going up in the TLT to basically break that. The reason being, there was a high volume spike in an incredible way, no two ways about that. You pull back, you expect to go up. Now, however, which is what my take is, that you will build cause. And if you are going to build cause, what ends up happening is this, is that you'll be pulling back. In fact, you could pull back anywhere into the TLT. It can really get to 122 pretty easy. And you'd be pulling back into that area with less than 8 million shares. So we'll see if that shakes out. We came down yesterday with 11 million. Today, you're at 1.2 right now. Let's go to Ken in Kansas. Hey, Ken, what's going on?
Hi, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Oh, we got a little snow. It looks like a winter day out here.
Snow. Oh, no, man, that's a trip. Yeah, that's good. That's good. You'll have a white Christmas, man.
Yeah, we may. We need the moisture.
Yeah, that's good. That's good.
I'd like to have you take a look at EPM. It's a small oil company.
Let's take a look. It's RPM International. They market, sell specialty products. The company's products, paints, protective coatings, roofings. Okay, so the low is 37. The high is 50. You said it's an oil company, though?
No, it's Edward Paul Mary.
Okay, thank you. EPM. I got it. Sorry, man. Okay. So this is Evolution Petroleum. They explore oil and gas. Okay, so the low is 650, the high is 13. Let's take a look here. Okay, so they take in $4 million a quarter. We put this back. Okay, I wouldn't be buying this until you got at least a sign of strength in it. You know, there's nothing here yet. You know, you came down like the rest of these, came down pretty nasty, you know, get cut in half.
I don't think it has any debt, is that right?
You know, I couldn't do that quick enough.
Okay, that's all right.
No, that's all right. Let me just see something. But, you know, you don't, for an equity that has a market capitalization of $243 million and only takes in $16 million, that's out of whack, I can tell you that.
Okay.
I mean, just think about that, right? Wouldn't you love to have you have a company that has a gross product that has $16 million and the market's saying it's worth $243 million?
Yep.
That's pretty insane, right?
It is.
Yeah. So, you know, just in that context, I'd be real careful. It's an illiquid stock also, but right now the way this thing is set up, you're at 7. This can go down and test like $4.30.
Okay.
So don't touch it, baby.
Okay. How about the FSC? You got time to look at that?
Sure.
Frank, Sam, Charlie.
Okay, this is Fifth Street Finance. Is that correct?
Yes, right.
Okay, so this is a business development company that provides financing to small and mid-sized companies, primarily in the private equity sponsorship. The low is $7.80. The high is $10.20. So this company takes in $71 million a quarter. Sorry about that. Okay, so you just broke the swing point from August of 2011. I wouldn't bite on this either yet. You know, you got to wait for a sign of strength in these. This has just been a one-way street, man. Do you know what I mean?
Yeah.
Yeah.
All right. Well, I thank you for the info, and you have a great week.
Okay, Ken. Have a great one. Have a safe one.
Bye-bye.
Bye-bye. If you're going to go and you're basically hunting for stocks that have got smoked, folks, okay, what you should wait for is if they've tested a swing low and they have lighter volume, that's awesome. That's the first part that's saying, okay, they could be making a bottom. Then what you're going to wait for is an expansion on the way up, a wide price spread, accelerated volume, then you buy the retracement off of that. That's how that shakes out. Let's go over to the gold contract. Gold is flat right now, and let's see intraday what they're shaking out there. So we are at 1194.70, and we knew that we were just talking about that first leg that they had taken down, and that wasn't enough. Now, this is really cool for gold, so check this out, folks. At 10 o'clock, that leg down had 96,000 contracts, but that was going into 13,000, so that wasn't enough, right? This leg down here is beautiful. This leg down is 2,600 contracts versus the 9,600. So now this is all you need in gold now. Now you got to get back inside 1194.70. Then you need a sign of strength intraday. You get that, and what that would be setting up, they couldn't bust it down. They want to bust it back up. And if you haven't test drove the Nadex platform, that would be a great time to test drive the Nadex platform. Bring up the platform and put $25,000 into your account, funny money. And what I would do is go over that to that and see what that gold contract is trading right now. In fact, we could do it when I come back. Yeah, it's 10:45. And then you can basically put on a paper trade and see how that shakes out. Because what you have here is that you have two separate setups that have just happened. Comes down, doesn't have the volume, the first one. You get below that with dramatically lighter volume. Then when you're looking for, because what we did have out here this morning at the 1213 number in the gold contract, that can very well go back and test that in a heartbeat. That's how that's set up right now. So this is going to be wild watching this shake out, particularly because of the fact that the dollar index, okay, let's go over to the dollar index. The dollar index had huge strength yesterday, huge. And it's dying on the vine today. it's not getting a follow through. Yesterday was 60,000 contracts. That's like, hey, the dollar index wants to hit the high again, which is 89.78. We've hit 89.61. And it looks like that's all it's going to do, though, is hit the high and basically not get up and over the high, and it doesn't have that full strength going to higher highs, which makes sense because of the way that the dollar had gone up for 7 months. But where the disconnect comes right now is that the gold contract, the silver contract, still hasn't got croaked with the dollar. Yesterday, the dollar went up over 1,000 ticks. That's a big number. No two ways about it. Let's go over and take a look at Apple. Apple out here just hasn't been able to get back to its highs also. When Apple came down from 119 to 111, it came down with 83 million shares. Right now, you're going back up with 19 million. 19 million is a setup to about maybe do about 60 million today. And 60 million shares is not going to be enough for Apple to get up and to stay up at those higher highs. Percentage-wise out here, what we have thus far, the Dow Industrial is up 1.3%. NASDAQ is up 1.3%. The S&Ps are up 1.3%. Europe has some real juice underneath it. But if we go over and we take a look at the FTSE first off, the FTSE had already come down to the swing point that it was going after, that October 15th swing point, and we come down there with some juice. So the FTSE in London is going to be back down again. This is going to be a trip watching this out. So watch this. We got down on Tuesday. We got down to a price point of 61.44. We did 1 billion shares. Now, it was going into 1.2 billion. No, 1.7 billion. So you had lighter volume there, but you still had way too much volume and correlation of how you're going down. That's yesterday, you went up with 700 million versus the 1 billion down. That's setting up as the dead cat bounce. It's going to go after those swing lows once again. The DAX in Germany, which trades like the NASDAQ, the DAX in Germany has a monster spike down at this 92 level. And we're at 97 right now. So the DAX in Germany has two different levels. The larger level, of course, is that October 15th level, high volume spike. So, what you're going to see here is that this is not all clear. If we go over to Big Blue, IBM, you take a look at IBM. IBM is the dead cat bounce. IBM is not going anywhere, folks. In fact, when we were talking with John, if you get that scan and pull IBM up, I believe the first resistance is might be about that 155 level, and we hit the 155.68 out here today. IBM has huge problems, and what the amazing thing about IBM is they're buying their stock back and they can't keep it up. So there's huge problems out here. Let's go over to Oracle. Oracle came out with numbers. Oracle was up $3 out here today. We take a look at $3.40 to be exact. You take a look at Oracle. Oracle's over its highs, 43.19. And if we take a look at this, it's on a monthly basis, it doesn't have the juice. Bottom line, daily basis, it does. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up 238. NASDAQ is up 70. S&Ps are up 27. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Don't forget, folks, at TFNN live programming every trading day, 10 hours a day from 8 o'clock in the morning to 6 in the afternoon. You get all that programming right on your cell phone at TFNN.mobi. We go over to Alibaba. We take a look at good old Alibaba. Alibaba right now is trading at 109.61. And as our man, Tiger Mitch says inside the den, it's not holding, and it's not. What Alibaba's done, this got over the 110.05 mark. The 110.05 mark is where it had gone down on December 1st. 38 million shares, and bottom line is we get a close under that. We hit 111.20 out here today. With that set up, that sets up a run back down to this 101 area. Where Alibaba has a huge amount of support, folks, is 99.70. The 99.70 is the day that it went public. That's where the big juice is, and if Alibaba ever does get underneath that, then you got to really watch out. What I do expect is that, you know, maybe the aspect of how I think Amazon's trading down because bottom line is it should. This is an equity that has gone up in a dramatic way. The market has basically, you know, let Bezos keep running and keep spending money. And, you know, for the consumer, I think it's awesome. There's no two ways about that. And, you know, all Bezos would have to do is turn around and say, okay, listen, I'm going to give shareholders money versus keep putting it back into the company. But what also happens is that this is a personality stock extraordinaire, and this can have retracements that are just absolutely vicious, meaning, 70, 80% retracements. They've done it before. If you go back to 2007, Amazon was in April, it was at $39. It goes up to $101, and then by 2008, it's back to $34. And in 2008, you're going to remember something. It bottomed way before the market bottomed. It bottomed like 6 months before that, and then it went nonstop from $34 up to $400. So big number. I suspect what Bezos is doing on a continual basis, and Amazon's doing on a continual basis, is getting us all used to a one-click deal, and you're going to see a lot of smaller businesses out of business. And this deal in New York City is a big deal, folks. No one has been able to crack Manhattan delivery, meaning grocery delivery in something within an hour. Bottom line is that he's going after it right now, and we'll see whether he can get it done. Let's go back over to the gold contract for a second. We take a look at gold. Right now, the battle's going to be on. The battle is on, number one, has been on. But we're going to see that battle continue because we're coming into Friday, and the number on gold right now today is 1194.70. That's the number that, if it gets back inside that, if it wants to get higher, you'll see it go back up to that 1213 very quickly. When the first sell down didn't have enough juice. At 10 o'clock, the first sell down. The last sell down only had 3,200 contracts. That 3,200 contracts is going into 13,000 contracts. You're going to need a lot more contracts to knock that baby lower. What the divergence, no doubt, out here is still the dollar. What it's saying right now is that the dollar index is going to fail. It hasn't hit the high yet. It's real close to the high. But that's the way that baby is set up right now. You stay right there, folks. We got our man, Mr. Basil Chapman, coming up next. He's going to be growling and prowling with you. Then our man, Mr. Larry Pesavento, Dave White, Darryl Martin, and, of course, I'll be back this afternoon. Dow Industrials right now up 231. Nasdaq's up 69. S&Ps are up 25. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.